Good morning, everybody. Welcome to the weekly finances. I decided to do a quick update this morning after the events over the last week or so. And so we're definitely in a historical time, and I think we need each one of us to take historic measures. That doesn't mean crazy and all that, but we need to stay on top of our investments and we need to understand what's going on in the world right now and what that means for our families and friends and ourselves and positioning ourselves for the future. Because obviously, this is a crisis, but it's also a great opportunity for most of us, or we're in the middle of our lives or younger. So there's going to be lots of years and decades following this time we're going through right now. It's the end of times. The Royal Canadian Mint closed for 2 weeks this weekend. So I already mentioned in the previous video about how, despite the prices being very low, the physical availability of silver and gold is at records low. So yeah, the silver prices are at records low, but there's no inventories. So what's going on? You call around in bullion stores, gold and silver stores, they're out of inventory for silver, albeit the price of silver right now is at some records low in over 10, 11, 12, maybe even 13 years, something like that. What I also realized over the last week or so is when I asked my private banker and TD how to get my hands on that kind of stuff, nobody really knew. Like it's almost like a secretive trading world. So the bankers don't have the knowledge. I even had to run into the bank on Friday afternoon. The branch itself didn't have any silver or anything like that on hand. They needed to order it. The trading desk phone number they gave me to call didn't work for 2 days. And then on Friday afternoon, I was in the office with a branch manager. He was trying himself to get through to that phone line. He couldn't. Was very frustrated. He has to use a direct line to get through people and so on and so forth. So for the retail investor, Mr. and Mrs. Joe Blow, this is like how can Mr. and Mrs. Everybody can get on this if it's so difficult even for branch managers and all that to sort this out, because they don't even have the knowledge themselves. It's not something that's very mainstream, but probably should be. So we talked about the price of silver going down and gold being fairly stable, even going up I think today. Reason that I came across gathering the information is that people need liquidity. People need to sell silver to cover their position. How does that work? Why is gold staying high or stable when silver is going down? Is that silver is seen as the second option in regards as a store of value. So in crisis like that, people will dispose of their silver before they dispose of their gold. So right now, lots of people trying to sell the silver. The inventories are non-existent. I called a couple of the stores today, and none of them was holding anything in regards to silver. And like I said, the mint is closed for 2 weeks. So I don't want to throw anybody in a panic. There's nothing special going on right now. Like, the volumes are not extremely high. It's the dynamics. Is that people use silver as the first thing to liquidate to cover their position, their investments, their need for cash. And then after that it would be gold. But as this progress and the price is so low, like right now it's in a range of like between 11, let's say, and a half and $13.50 in the price of silver. As long as it oscillate in that, I don't think there's much opportunity for huge gains, but it's a good time to start building a base, because right now the ratio of gold to silver is as high as it's ever been. Historically, touching something like 120. That means that the silver is 120 times cheaper than gold, and that's just insane. Like, I mean, it's never been that far apart spread. So I think it's a good time and a good opportunity to rotate into silver before rotating out and then rotating into gold. So like, it's a good time right now to try to get your hands on silver. Make the best of that squeeze in the ratio to gold to silver, and then jump over from silver to gold at that point. So obviously you can own these things through registered accounts such as TFSA or RSPs, certificate of precious metals, are your best option. ETFs and funds are the next one. Certificate of precious metal, they're guaranteed, supposedly insured, but also they're a allocation of ownership of physical silver or gold. Albeit in times of crisis, I'm not sure if people will be very willing to buy those certificates as much as buying the physical metal. ETFs and funds don't own anything in metal. They might be leveraged on, let's say, gold miners or stuff like that, but it's not the physical metal. So be careful with those. In non-registered account, then you can hold coins, bars, certificate if you want. You can literally take cash, go to the bank, put an order, you pay them, and you walk away with the precious metal, either silver or gold, whatnot. Also jewelry, but high quality jewelry. I think it's 20 carats or 24 carats and above is considered the investing grade of jewelry. That's another thing that's a way to invest in precious metal, and it's obviously a deep cultural practice in places like India. And so, high level of gold, so like above, I think it's 20 carats, it becomes an investment grade quality jewelry, and then that can be resold as an investment grade thing afterwards when the price goes up and stuff. So that's another way of doing it. Albeit, like I said and mentioned, it is not easy right now. I mean, I have time, I take time at home, I call around and all that. The bankers, for most of them, they don't do that much. It's a fairly small world, it seems, and it's really hard to get your way through it. So you can do that through direct investing or whatever your banking online system is called, using the certificates. But if you want physical, you have to buy it outside of your registered account and that kind of stuff, from what I gathered. So one last thing I want to talk about is inflation versus currency devaluation. I hope that by now most of you have watched Mike Maloney Hidden Secrets of Money series, because it's one series that explains it very well. I'm sure there's many more. And understanding that inflation and currency devaluation is the same thing. So when the bank or the central banks talk about inflation of 2%, what they're talking about is devaluating your money by 2%. It's the same thing. Same thing to understand. The price of gold does not vary. It's the price of the money you need to buy gold that varies. Gold is the money, and the currency or that you owe, like Canadian dollars, American dollars, that kind of stuff, that's what varies in value, and then therefore varies in how many of those currency you need to buy gold. So inflation and currency devaluation is the same thing. So it's important to understand, and when we are listening like sheep and be, inflation, what we're talking about is devaluating our money. You see that historically in examples like Rome, when they did what's called clipping. It was the exact same thing. And so it's important to look back on those things and put that in context of today and say, them printing money like they're doing that is the exact same thing as clipping. What is that going to create? So I've talked about that in a previous video. The inflation, hyperinflation, and then the real deflation following all this. Why is this important for the world economy? Well, it's pretty simple. Since the world's economy is so interlinked, if we here don't have huge inflation, then that means that the smaller economies of the world, they can't rise because they're so interlinked. So the example that's so easy is, as long as we're paying people in third world country 25 cents an hour to make shoes, so that we can keep paying only $75 or $100 for a pair of shoes, then it's always going to stagnate. There's not going to be a rise. So it's this built-in disease in the system that for prices to rise, we have to devaluate the money, because we're not using money, we're using currency. And so it doesn't allow for stability of prices and that kind of stuff. So I just wanted to touch upon that. If you want me to talk more about inflation, currency devaluation, and so on and so forth, and I'll be happy to do that. But I just wanted to mention this because it's important today to understand that if the prices of things start going back up, it's not because the value is going up, it's because your money is worth less. That's why you bought your car for $5,000 in 1960 and you're buying it for 20 today. It's because your money is worth less today, so people want more of it because it's worth less than it used to be, and that's built in the system itself. So just one quick think about it. Right now, we're going through the older than thou attitude. You know, fine if you want to talk about isolation and all that, but I think it would have made sense to look at it from a rational point of view and say, okay, the people that are at risk are the people that should be isolated, and we should then develop systems, services to support this smaller pocket of population. Would it be 25 or 30%? And put in place emergency services for these people, allows the economy to keep a certain speed, momentum going. Meanwhile, we take care of these people and what they need, and we protect them. And meanwhile, the rest of us that would go from almost none to mild symptoms carry on with our life just like we would any other day. And the way that things are going right now, it's impossible to challenge any of this thinking because it's a holier than thou attitude. And the way things are going, think about this. Why are we still driving then? Like, we should go up an arm to make driving illegal. It is proven by numbers and by a long margin that human beings are very dangerous behind the wheel, and that computers do a much better job. It's a big splash on the newspaper when a computer-driven car crashes, and oh my God, it's the end of the world. But if you look at the number of kilometers driven and then the number of accidents that those computer puts cars into, most of the time it's even the fault of another human driver and not even the computer truly making a bad decision or assessment. And so the way things are going and how people are happy to be afraid and then give the responsibility of security and freedom to somebody else, then you trade your fears, your freedom for your fears and security. And the way things are going, like, how are we going to stop making illegal driving, saying like you're a danger to everybody? Just like if you go out in public right now, you're a danger to everybody. So I just wanted to throw that in there. I think maybe now, after a week and a half or so of this kind of quarantine, people are ready to think about more rational solutions than just the overall blanket kind of knee-jerk reaction we've seen over the last week and a half or so. And so I'm going to leave you guys on that. Hopefully you all have a great day, and let me know if you have any comments or questions. Cheers.